Hey everyone, welcome back to another episode of AWM Insights. It's your host, Justin Dyer, Chief Investment Officer here at AWM, joined as always by Mena, Portfolio Manager at AWM. And we're just going to jump right into it. There's a lot going on. That might be one of the bigger understatements of the year, maybe even of the last few years. Right? We've been talking a lot about the conflict in the Middle East over the last few episodes, market volatility, oil prices, all of that good stuff. And we'll certainly still touch on that. That's obviously probably top of mind for a lot of people. But we're going to expand that. We're going to expand that into a lot of the other narratives that are maybe in some cases newer, or in other cases have just kind of fallen to the background and are slowly rising to the forefront. And one of those, Mena, being AI. Right now, that hasn't totally fallen to the background. I think that's probably still been on the top of mind or on tops of minds for many folks. But at least in my news feed, it seems like the question around the broader impact of AI is popping back up again. What is it going to do to jobs long term? Is this going to be completely disruptive? Is it going to take all the jobs? All of that type of stuff. A lot of it's very much fear mongering, but it's certainly adding to just like general uncertainty and general complexity of the current environment. We can add to that on the potential positive side. SpaceX is going public, right? We've already talked about the aforementioned conflict in the Middle East. I mean, there is no shortage of interesting things going on. Some of them are more relevant to investing than others. We're sending people around the moon for the first time in decades, and what is it, 50, 60 years, which is kind of cool. But yeah, just again, no shortage of things going on, no shortage of market volatility. And we want to talk through how are we digesting all of this and in a way questioning our existing beliefs. We've alluded to that in conversations before, right? We don't stick our head in the sand. We definitely are long-term investors, and the bar to make any changes is insanely high because we know from data and history that making changes, generally speaking, especially making emotional changes, making knee-jerk reactions, is usually a recipe for failure or poor returns at a minimum. But again, we don't stick our heads in the sand. We pay attention to what's going on. We ask these questions. It is an interesting time to be in our position, and yeah. So maybe, I mean, just turning it over to you, like, how are we thinking about this? What are the questions we're asking ourselves? What are, more importantly, what are the conclusions that we're leading with?
Yeah, and the AI doomsday narrative is such an interesting one. I'm here right now, so I don't believe in it. If I did believe in the doomsday narrative, I would be going to trade school to become a plumber. There would be a career change, and I would withdraw from here. But there is that narrative going on that all white-collar jobs are going to be taken. AI can do things so efficiently, so quickly. All right, you blow up a large, pretty much every service job in the U.S. What are you going to be left with? You're going to be left with an extremely high unemployment rate. You're going to be left with people not being able to buy anything. And it's sort of this just negative cycle of doom in a way. That's not really how innovation works, and it's not how innovation has worked in the past. Usually when you have innovation, it disrupts some businesses, it disrupts the incumbents, but there's real value that's created on the back end here through a whole host of businesses. I think one thing that people kind of ignore is a lot of businesses are going to be more efficient, and we've actually seen this in the private markets when you do incorporate AI. Customer service oriented businesses, if you're able to one of our businesses is able to cut your customer service bill by 60%. If you're able to do that, then your business is immediately more valuable. So I think people kind of miss all of these smaller details, and they think AI is going to be disruptive, it's going to be negative, where there is a lot of real value that's created both in public markets and in private markets that usually and historically has far outweighed kind of what the incumbents have lost. So even though there are losses, and there's always going to be losses when there's innovation and when there's disruption, there's usually a lot more to gain. And you see that from just the growth of indexes in general.
Yeah, totally. I mean, there's a great old quote or adage, whatever you want to call it, of creative destruction. And that's part of capitalism. And that's exactly what you're saying. I think there is a plausible argument that the pace of that disruption with AI or just technology in general, I mean, has sped up. But humankind, human nature has always taken new technologies and actually used it to better humankind, to better the species in a creative way. That doesn't mean there isn't disruption, amongst certain roles and hey, there has to be a retooling of a reskilling of certain industries and jobs in a different way. That probably will happen. I would almost say it's a certainty that something like that will happen. Over what time frame? Your guess is as good as mine. And I think kind of that's a great segue into, right. We don't play those games of guessing. We play the game of allocating capital in a way that gives us the highest confidence to meet our clients' priorities. In a time like this, I was asking you, excuse me, how are we questioning ourselves and whatnot? What are we thinking about internally? And we say, okay, well, how is that going to change how we should invest? And at the end of the day, the answer is no. If anything, I think it underscores the general approach. Most certainly, it underscores diversification and the benefit of diversification when there is this insanely wide dispersion of potential events that are happening, whether it's AI driven or the geopolitical climate and environment, whether it's the current conflict and war in the Middle East with Iran or otherwise, right? It's, for the last 18 or so months, there's just been a heightened, even beyond that, there's just been heightened tensions around the world. And there's a reset that's going on. And so you take a step back, understand all of that, what's going on. Yeah, it's creating some volatility, which is never fun. We have a plan in place to capitalize on that if and when that hits and gets even more extreme. And oh, by the way, if you happen to be in the world of baseball and paychecks start hitting and there's some volatility, generally that's actually a good time to invest and put capital to work because you're potentially buying it at discounts. So all that's going on could give folks a little bit of heartburn, heartache, headaches, whatever you want to call it. I would also very much encourage people to double check their news diet, right? And yeah, maybe you're interested in it, but don't get obsessed with it because you got to focus on what you can control. That's certainly true just in life in general. It's also true within investing and your portfolio, and acknowledge that, hey, we don't predict the future. We can't control markets. We can take advantage of markets. We can set ourselves up for success with markets ahead of time and come in with that plan and really make sure the odds are stacked in our favor. But yeah, you put all this together, and I certainly have been thinking about this, and I am very, very thankful that we have the diversification tenet really core to everything we do, whether that's global diversification in general across entire portfolios or like what you were talking about across public markets and private markets, because AI largely is in private markets right now. Not to say public companies aren't using this technology, but from a company kind of picks and shovels approach, that is largely in the private markets at this point in time.
Yeah, and what we're seeing in public markets in terms of the benefit there is profit margins are expanding. So we're all nerds here on the call, and we look at the S&P 500's profit margins, and we track those. They've been expanding because of AI, because companies are able to do a lot more with a lot less. That's actually a tailwind in general. So yeah, there are all of these benefits, but you can only really benefit from the benefits if you're diversified, and that's diversified across sectors, and as you said, in private and public markets, because a lot of that value is being realized in private markets. Couple headlines: SpaceX is confidentially IPO-ing.
That's not just information we know about. That's been broadcast across the internet.
I'm not going to jail. Yeah, I'm not going to jail for saying that. That's they're going to do that at over $1 trillion which is a mind-boggling number. That value has all been created in the private markets. Same thing with OpenAI. They're raising at they did raise at $850 billion. All of that has been realized in the private markets. So if you're not investing in the private markets as well, you have the resources, you have the time horizon you are missing out, especially with this new regime change that you talked about and you discussed. You are missing out on a significant source of wealth creation.
Yeah, well said. Well, we'll leave it there. There is a lot going on. Again, kind of understatement of the year, certainly maybe beyond that. But know that there's a plan for all this, right? All of these events are certainly contributing to uncertainty, very volatile markets. That likely, I think, is good. I shouldn't say I think, that's likely to continue. But we have that plan in place, and diversification, broadly speaking, across regions, across geographies, across public markets and private markets, is the way to deal with these type of environments. It gives us the highest confidence of success for you all, our clients, and most importantly, using money as a tool to accomplish what's important to you, and that is your priorities and goals, and that is how we deploy capital and stress test, right? That is the bar we're always thinking about and really making sure we're measuring ourselves against, and very confident that approach is the best way to deal with environments like that. So keep questions coming, lots going on. Any questions about this podcast in particular or just what's going on in the world, shoot us a text.
626-862-0355.
Awesome. And until next time, own your wealth, make an impact, and always be a pro. Thanks for listening.